Welcome to the Blockchain Report. We discuss all things blockchain technology, crypto assets, DeFi, NFTs, and much more. Today we'll be going over weekly news wrap up, quick jump into the markets, Bitcoin 23 hovering right around 23k. Got the market cap 1.1 trillion, up a little bit from last week. We got gas. Ooh, that's got to be a record low. I don't know if I've seen it under 10, but that's pretty nice. That's pretty nice. Let's check out daily. Last we met was probably around right here where we started to get the little pump. Not the wrapper, but I was expecting at least, a little bit more of a pullback right here. And this is kind of what I was sharing in Discord the other day. Is that these volume candles right here on the daily, the decline of volume, you're not going to go push up any higher. You're gonna have a pullback. It's similar to here. You get the volume dropping down, a little pullback. So I was expecting at least 22 at not 22 but 22.2 to 22.6. Almost got there. I think we can get another leg down before move back up, or we could just come straight through. I would like to see a retest of this trend, just kind of bounce off and maybe right here. If we get a bounce right here, we're definitely going to go a little bit higher. But overall, we'll kind of touch on this, whether or not it's a good indication that we've bottomed. But we're getting there. We may not have bottomed yet. We've probably hit around the bottom, or we may have hit the bottom once and we're going to hit it again soon. But yeah, who knows? Who ultimately knows? There's a lot of stuff in the economy or in the world itself that's kind of iffy right now. So trying to predict anything is just shooting a shot in the dark. But we'll jump into some news. Unfortunately, Cardano's Vasil hard fork has been delayed for a few more weeks. Or fortunately, whether or not you see this as bad news or not, I think it's how things go in technology, the whole space. You get stuff that gets delayed, things come up, bugs, many issues, and with Cardano, they want to be able to fix the issues before they put it out, unlike Ethereum where they put it out and they fix it as they go. But Cardano's much anticipated Vasil hard fork has been delayed a few more weeks. The Vasil upgrade was slated to go live in June, but the Cardano development team has prioritized a smooth network transition. On Thursday, Input Output Global, IOG, the company responsible for Cardano's research and development, posted an update on YouTube regarding the forthcoming Vasil hard fork. Kevin Hammond, the technical manager at IOG, announced that the much anticipated upgrade will be pushed back once more time to ensure that all parties, including exchanges and API developers, are all ready for that. So they've been working on resolving some testnet difficulties while moving forward with Cardano node version 1.35.2. The latest node version addresses issues with stake pool operators, decentralized applications, application developers, internal testing, and other testnet issues. The hard fork is to enhance scalability, and it's the most significant upgrade to Cardano since the Alonzo hard fork last September, which implemented the first ever smart contracts on Cardano. So it was a huge thing. And I remember when it launched, and Sunday Swap was one of the first basically decentralized exchanges and on there, and it was a mess. Things would not go through. You couldn't get NFTs minted, couldn't send money to anyone. It was crazy. The whole network was locked up. So this will just bolster that all around. It's going to be a huge upgrade. So exciting. And you want it to work. You don't want to put something out and then say, oh, a couple weeks from now, oh, well, we thought we had everything fixed, so we need to revert. But it's not the case with Cardano. They like to put it out when they know for sure that it's going to be good. They test it and hammer it hard. So I like this move. Gives you a lot more trust. And if you're going to be transparent about your issues and own up to it and say, hey, we don't have everything that we need to make sure this is a good transition, then there's a lot of trust being built there. So that's good. More Polygon news. Polygon's just moving in the bear market, man. They're moving. The Polygon network partners with Mercedes-Benz to develop a blockchain data sharing platform. I think I talked about this a little bit last week. And they unveil Eccentric, which is a new platform that allows businesses to buy and sell data on a decentralized protocol without intermediaries. In collaboration with Polygon, Daimler Southeast Asia launched Eccentric, a data sharing system allowing companies to transact with data. In addition, the blockchain network will provide data exchange between firms from different industries affiliated with Mercedes-Benz. Moreover, the data sharing protocol is specifically developed for large-scale use and includes a Know Your Business (KYB) and other features restricted to corporate use only. On Eccentric, data is not stored on the protocol. Instead, NFTs are used to represent the data set on which a metadata hash is stored on. Some businesses can carry out transactions on the data sharing platform on the public chains hosted on the Polygon network. However, when users can select whether to pay for their data processing using crypto or stablecoins. And the gas is super cheap on Polygon, so that's a big plus. There's a big reason why a lot of companies are working with Polygon network and other layer 2s as well. It's cheaper fees. So what is Eccentric? Eccentric is a fully decentralized, I don't know why there's a C right here when it's a K, but we'll go ahead. It's a fully decentralized data market hub developed by Mercedes-Benz to help with data transfer and storage. It uses the Ocean Onda V1 smart contract protocol to run multiple data libraries. Comes fitted with the latest Ocean protocol, allowing unrivaled data storage, usage, and transfer. That's pretty neat. Ocean protocol. Don't believe I think I've heard of it, but I haven't really dug into it. So just data storage for the blockchain for big companies. Pretty neat. That's what we need. More Polygon news. The Polygon releases their semi-annual report and detailing its progress since the start of 2022. This blog also highlighted some of the network's plans for the second half of 2022. In a report released by the network's developers, Polygon established that they are currently focusing most of their energy on building for the future. Polygon bet big monies on builders. According to stats, Polygon invested $2 million in hackathon bounties and Gitcoin commitments. Accordingly, the number of apps running on Polygon rose from 7,000 in January to 19,000 in April. Jeez. Moreover, the number of contract creators increased to 153K at the time of writing, and monthly transactions rose to 90 million. Polygon reiterated the relevance of builders within the Web3 ecosystem. Their blog said, "It's still the early days of Web3, and without the best builders, even the most superior technology could go obsolete. So we have poured time and energy into making a strong community of builders." Yeah, they have. Their Polygon Guides tool introduced earlier this year allowed builders to meet one another in events across the globe to become Web3 explorers. Moreover, Polygon launched a Polygon Academy, which helps individuals learn how to build in Web3 on Polygon. They have also met developers at workshops, hackathons, incubators, jams, Twitter Spaces, Wag me on Polygon, hashtag wag me on Polygon huddles. This we all gonna make it is wag me if you didn't know. And more. Network committed $1 million for funding goods on Gitcoin, launched Polygon Fellowship, and hosted 15 hackathons. Polygon has Build It hackathon with $500,000 in bounties and prizes, and a green blockchain initiative focused on fighting the climate crisis. So Polygon's cumulative carbon emissions from inception in order to become climate positive heading into the future. The network needs to account for all network CO2 and energy consumption in DeFi, NFT, and gas charges. Accordingly, the network announced a $20 million pledge to fund outstanding community initiatives and projects developing technology to fight global warming. And they spent about $400K in high quality carbon credits. They also offset about 104,000 tons of CO2 emissions in June. And its plans for the rest of the year. According to their post, the plans are divided in 3 parts: products, events, and onboarding accelerators. The network intends to give developers more creative power, allowing them to build the projects of their dreams. There are plans to organize major meetups in places like ETH Seoul, ETH Mexico, ETH Lisbon, DevCon, and many more. Since the network plans to onboard more users, the Polygon will induce partnerships and support more builders to join the network in the coming months. Polygon's doing it, man. Polygon's doing it. What are they? What's Matic at right now? I mean, look at that pullback. It looks almost like Cardano, which is right here. I mean, shoot, that's pretty damn close. So, as you can see, Polygon making some moves. I mean, you're up 50% just a month. So, or 100%. I'm sorry. There's 20% or 50% in just a week. Yeah. So Polygon doing some good stuff. 3 errors. 3 errors. Yeah, they had a lot of errors, more than 3. Founders of 3 Arrows speak out on why they hid amidst the platform's failure. After 5 weeks in hiding, the humiliated founders of 3AC spoke openly about the tragic demise of their once flying hedge fund. They claimed to have received death threats to their lives, which is why they remained unnoticed. Well, yeah, I definitely would be in hiding too if people were threatening my life after a debacle like this. Suzu and Kyle Davies, both 35 years old, claimed on Friday that 3AC margin calls on loans that should never have been made due to their disastrous crypto venture are now descending, according to Bloomberg. Zhu and Davies attributed 3 Arrows' unexpected demise to their overly optimistic assumptions, with Zhu claiming that they put themselves up for a market that never materialized. And you can't just put the blame on margin calls that should have never been made when you shouldn't be in that position in the first place. So that's the first thing. So don't be gaslighting the margin calls for your incompetence, basically. In documents submitted on July 8th, the Liquidators Council indicated that Zhu and Davies had not contacted them and that the location of the firm's founders was unknown. Zhu stated that they had no choice but to go into hiding due to death threats. Zhu told Bloomberg, "People may label us foolish or deluded, and I will accept it, maybe, but they think I stole money over the last period when I put more of my own money back in. That is not correct." Zhu and Davies demonstrated a systemic failure of risk management in which the impact of bad bets was magnified by the ease with which credit was available. The pair acknowledged that the collapse caused substantial pain, but they generally avoided questions about the impact on the others in the cryptocurrency ecosystem. Instead, they emphasized their considerable losses while refuting allegations that they withdrew assets from 3AC before its bankruptcy. According to the document, Zhu and Davies attributed the hedge fund's demise to overexposure to Terra, staked Ethereum, and Grayscale's Bitcoin Trust. Zhu remarked they initially could not observe any warning indications in the instance of Terra. And yeah, that's just a whole shit show. These guys should definitely be facing some charges for negligence something. It's kind of wild. It's kind of wild because any centralized finance business like this would they come at them hard. So just a little interesting. See what's going to happen. For those of you interested in the Helium network, Helium caught in a web of falsehoods about its partnership. And I got a little. Let me actually pull up this Discord because there is a little update about the network itself. So there's been issues with rewards being cut, and there's a little TLDR right here. Block times are slow right now, and there's a lot of miners that are offline as well, so the network's not running as efficiently as it can be. So beaconing is slower, and HNT rewards are lower for everyone. Short term, the validator team is investigating the problem. Long term, this will be solved by moving much of proof of coverage off the blockchain. So if you, like myself, have been getting super low rewards, just hold on. I've thought about selling one of my miners, but we'll hold on to it. But this is interesting. So reports have emerged that Helium has misled the public about its partnerships. Apparently, the company has no collaboration with Lime or Salesforce. And you want to look more into this. So beyond its initial test of its products in 2019, Lime has not had and currently does not have a relationship with Helium. And Helium is not a Salesforce partner. And regarded the graphic on the website showing Salesforce logo as inaccurate. So little funny stuff, and the Helium team has not gotten back to them. But in a recent Twitter thread, angel investor Lyron Shapiro described Helium as a failed project, where he explained that the company had a little revenue despite spending millions. The project's Reddit community members have added that the developers need to be brought to book as the purported partnerships were used to draw unsuspecting investors. So let's check out Helium right now. Kind of check and see if they got their partnerships on here. Nope, I don't see them on here. Yeah, they might have taken them off after that, but it's not good. It's not good. If you're gonna lie like that, I'd hate to cash out with HNT this low, but man, I mean, I got some out in the 20s. I even got some out in the 40s, but we'll see. We'll see how it goes. It sounded like somebody fell next door. It was interesting. Using one of the work offices. Sounds like some wrestling. Worst places to keep your crypto wallet seed phrases. I have a book that I use that I write everything down in, and my girlfriend actually just recommended getting a second book to keep as a backup in case something happens to that one. But under the mattress, in the seams of pieces of luggage, or even rolled into a cigar, what are the worst and best ways to keep a seed phrase safe? Key to unlocking and recovering cryptocurrency, a seed phrase should be secured and safe, especially now that prices are low and the crypto tourists have checked out. Might be time for a crypto security spring clean. Security starts with the seed phrase, sometimes called a recovery phrase, and that is what you use to get in your wallets. So it's a list of 12 or 24 words forming a mnemonic phrase. And let's see what they recommend. These are some pretty good memes. So this would be something like a seed phrase, just 12 or 24 random words, and it's like your security. So you want to keep these on paper if you can. write them on paper. Make sure that you don't, if you want to laminate it, that would be great. Keep the integrity of the paper. Or the Amazon sells these engraved pieces of stone or pieces of something that you can engrave your seed phrase on. I think that's a bit much, but definitely don't store it on your computer digitally anywhere. Don't type it in your phone unless you're inputting it into unless you're importing your wallet on your phone, which even then I'm going to be moving all my crypto wallets off of my phone to a separate phone that only has that's not tied to anything else, not any other networks, nothing. So the less chances of it getting hacked. And here's where we talk about a little bear market bottoming indicator. So apparently this Puell multiple can show or give an indication on when we may bottom. So Puell multiple is one of the best known on-chain Bitcoin metrics. It measures the value of mined Bitcoin on a given day compared to the value of those mined in the past 365 days. The resulting multiple is used to determine whether a day's mined coins are particularly high or low relative to the year's average. From that, miner profitability can be inferred. And if you check out this graph right here, as you can see, anytime it's really dropped into this green zone, I mean, you get a pretty much bottom, right? That is the bottom right here. And you come up, up here, you get these big crashes, and then right here, so you hit the bottom, but then you still kind of had these little close double bottom, triple bottom blast off. And you go up here, way past, or into the red again. You get the crash. Look at it right here. The bottom, double bottom, take off. Then you come back right here, crash 2020. This first little dip right here, second, then this single, no double bottom here. Now we're coming back into this. We actually hit it pretty good. So, according to this, we could be in a little, we could be bottoming right here. I mean, it's a strong case. We did go under 20K for a little bit. So I would feel comfortable dollar cost averaging in right now. Definitely feel comfortable doing that. So just make sure to keep some dry powder on the side. Ticketmaster scouts productization of enterprise NFTs beyond ticketing. Ticketmaster's job posting for a product manager of NFT ticketing tooling reveals the company's intent to roll out NFT-based enterprise products across all content categories, including sports and music. Now, this is interesting because I find this really cool. By looking at job postings for companies, you can kind of get an idea of where they see the company moving and what kind of things the company will be doing. Like, for instance, I work at an electric vehicle company, and we expanded from China to Norway. And before we expanded into Norway, there were job postings in Norway for certain engineering roles, and people caught wind of it in the US and wrote some articles, and it boosted the stock. So you can get an idea of what the company wants to do just by looking at some job postings like this. They wouldn't have this job available if they didn't have plans of rolling it out, or at least testing the waters. This is really neat to see. Fractional ownership of season tickets and suites, and a reinvention of ticket resale process. Very cool. Very cool. So let's check this job description out. So product manager, NFT ticketing tooling, New York, West Hollywood, or remote. Oh, here we go. Here we go. Check it out right here. Oh, that's all. We don't have a. Oh. So let me see the job description. So if you're interested in this, perform business analysis, blah, 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 you can check this out. You gotta have some software development experience, quantitative data analysis. So pretty cool if you're interested in that. Ticket Master stepping up in the NFT game. And last little bit of news. This happened yesterday, actually. I was in one of these Discords and people were talking about this hack that was going on, and I don't think it'll make a huge impact, but DeFi is definitely on the hot seat right now. So a smart contract bug let a large number of attackers drain the project's funds. After a few quiet months, it happened again, another blockchain bridge hack with losses in the hundreds of millions of dollars. Nomad, a crypto bridge that lets users swap tokens between blockchains, is latest to be hit after a frenzied attack on Monday, which left almost 200 million of its funds drained. They had it initially as an incident that was being investigated. In a further statement released Tuesday morning, they said it was working around the clock to address the situation and also notified law enforcement. So it's kind of shitty because we're still in the early stages and there's a lot of issues with a lot of these swapping, I don't know what to call them, exchanges. They're not really exchanges, but protocols. And people are finding ways to exploit them. And some of these, like I never really messed with Nomad. It was in the Moonbeam network, and that's another layer 2 network, but there's just so many protocols and bridges and swaps that if you're not careful with how you build it and getting audited to make sure that your code is legit and safe and secure. But then again, you always have someone that can exploit something in your system. So I guess that's what, bounties are for hackers. Try and exploit the system. But this is the thing, if you don't work on that before, or at least try and say every once in a while, once a quarter, say, hey, we want a group of hackers to try and exploit the system, and we'll pay you a bounty for it. Instead of ending up getting hacked and losing millions of dollars and not ever getting that back. So it's kind of a catch-22, but it is important to make sure your system is robust and safe and secure. But it's all part of the building process. You're going to have big losses, you're going to have big gains. You're going to have a lot of nefarious actors in the space, but we just got to keep building. There's always going to be shitty people, shitty companies, but we just keep doing what we do, put our head down, build every day. We gonna get to that 100K Bitcoin. Shit, we gonna get to that million. All the way up here. A long way to go. But Bitcoin has been from fractions and fractions and fractions of a penny to $69,000. So you say it can't be done? Say, don't believe me, just watch. And with that, y'all have a wonderful day. This is the Blockchain Report, and I will catch you on the next one. Peace.